Bank of Baroda came out with its Q4 numbers yesterday, posted a mixed set of numbers. NII went up by 6% sequentially. Profit after tax as well was up about 7%. We spoke to MD and CEO Decoding Chand to put a perspective on these numbers. Listen in to a small slice of that conversation.
Let me again put the quarter and the full year based on a strong business model. We had a robust growth in terms of the business. At the same time, the profit has been very strong. My advance growth has been 12.5%. The operating profit growth has been 15.3%, and the net profit growth has been 26.1%. It talks about something a strong and sustained, profitability business model for the bank. At the same time, if you look at the asset quality, it has been trending almost like for last 8-9 quarters downward. And first time we have gone GNPA below 3%. So what we're guiding the market that would sustain the same business for the coming year, like 24-25 this year, wherein we're looking at a deposit growth of 10 to 12%. The advance growth would be something around 12 to 14%. At the same time, on the profitability front, we have upsized our ROA guidance. Earlier, we had given guidance of maintaining ROA in excess of 1. Now we are giving at 1.10. So we strongly believe the bank's the financial strength is panning out in terms of a stronger number going forward. So we are quite hopeful of also maintaining the guidance. At the same time, the margin guidance also, we maintain the same as last year. So overall, it's a positive, strong as far as the bank is concerned on the financial front.
Right.
And I think going forward, based on the outlook, we'll maintain the same.
Sure, sir. So my next question is, so where are we on the margin cycle? And so do you think, according to you, has the cost of deposits peaked?
Yeah, that's a very fair thing at this point of time. We run the rate sensitive liability. So I think on the cost of deposit, if you look at this quarter, the growth has been higher than the increase in interest income, right? So, but still the margin has been strong because we are able to manage the ALM profile so as to sustain the margin. Rather, the margin in Q4 has been better than that of Q3. So at the same time, basically the margin, the cost of deposit pressure came from repricing of deposit. And I think at this point of time, the deposits are fully repriced. So considering that, we are not looking at much of upward pressure on the cost of deposit going forward. Based on also on two scenario, because we think the rate of interest scenario going to moderate on better liquidity scenario for this year. So in that scenario, I think we have the cost pressure fully to a large extent accounted in the current cost of deposit. At the same time, whatever be the scenario in terms of cost of deposit, the bank, again, as we focus on the margin, will be in a position to maintain the margin going forward. That means we try to reprice advances so as to cover up the cost of deposit in that way.
Sir, and how do you observe the corporate book? Is corporate back now?
It is like there is a demand happening. Our corporate growth has been strong at 11-12%, and it is a consistent growth in last many quarters now. What we have done typically on the corporate book is to strengthen the relationship piece. We have relationship vertical now looking into all customer account, both from the point of the share of wallet, the account planning for those customers. So that's working well for the bank at this point of time. We also on the mid-corporate focus a lot last year in terms of opening of mid-corporate branches, targeting them, particularly ticket size, which again gives me a higher collateral, higher pricing. So overall, there is a good demand, and there are demand happening on the infrastructure space and other space. There is also increased availment on the working capital front. So I think the economy at a very good stage. At the same time, we are also trying to map to the economy by giving a decent growth there.
Right. So you also briefly alluded to the ROA. Is there scope for expansion? So can you elaborate a little more on what you can tell us about the ROA?
Yeah, so that's precisely the point I am making. If you look at my NII growth and the operating profit growth, there is a significant jump in the operating profit. The focus for the bank is on the non-interest income on the fee side. If you look at the non-interest income for particularly this year, the growth is almost 40%. The fee-based income has gone up by almost 16%, and the treasury income also gone up almost by 40%. So meaning thereby the bank is clearly focusing on particularly on the fee side more, on the non-interest side more, so as to give a decent ROA. And that's precisely the reason why we're confident to upsize the ROA that our ability to like generate a higher fee is much higher at this point of time. And that gives me a jump up in terms of ROA. So earlier also we said we look the NIM and ROA as twin parameters for us to optimize. And that's something is panning out in terms of giving a jump up in the ROA.
Sure, sir. So a final question from my end. So what part of the book is project finance and the kind of traction that you're witnessing here?
See, that's you are referring to the recent guidelines because our policy is that as it is a consultative process and draft guidelines, we are not any comments on the matter with regard to project finance in terms of data and all.
Right.
But what we see, the impact is only a couple of basis points on the credit cost, and we think that would be very well we can absorb that in case a scenario of that kind of happening, or we can pass on the pricing to the customer. But then we just wait for the final guidelines on the matter. We are evaluating the entire thing, and once we are ready with that, we'll come back to the market on that.
All right, Mr. Chand, we'll leave it at that. Thank you for joining us here at NDTVProfit.
Thank you very much. Pleasure interacting with you. Thank you.
Bank of Baroda there, not quite setting the stage on fire, and that's been the story for PSU banks per se. I mean, if you look at what PSU banks have done in the last 7 days, you will see most of them having corrected. The PSU bank index itself, if you just look at it over the last 5, 6, 7 sessions and look at the chart this week, has not been great for the Nifty PSU bank index on your screen. It's been a largely a negative piece, despite the markets now being stable for the last couple of days at least. So PSU Bank certainly having a bit of an issue. What is not having an issue though is HAL, at least in the minds of the brokerages, because we've seen enough brokerages being bullish. UBS has gone a step further and given a very stiff target on HAL. Let's get my colleague Anushi to tell us what are the reasons why UBS is so bullish on Hindustan Aeronautics. Anushi, good morning. Take it away.
Hey, good morning, Neeraj. So UBS has about a target price set for 5,300 for Hindustan Aeronautics, which implies a 34% of an upside here. So they're forecasting about a threefold jump in their order book, which would lead to about 25% of growth going forward. A strong projection over here with a pickup expected in the military fleet. Now they're saying that the orders and the delivery run rate will increase with a stable profitability going forward. Even the expected order wins that comes around in the range of $5.3 trillion over the period of FY24 to 28, which implies a 4x jump in their order book to by FY28. And now again, the government has remained steadfast in their push in the defense space, in which HAL stands as a prime beneficiary and it has a strong execution capabilities in the same. Now, the street had some concerns about the production ramp up for the same, but UBS finds that these concerns are somehow misplaced and it is on the path to achieve those set goals. Again, the target price has been led by the earnings upgrade that we are seeing, and pertaining to the same, they have increased their PE also for this from 32 times to 40x. Thus, we are seeing this 34% return of an upside over here going forward.
Okay. Anushi, thanks a lot for putting that into perspective. That's Hindustan Aeronautics, which is up 2% now. Unfortunately for Zomato, that is down in trade. The numbers reaction happened yesterday, but I think the con call had some takeaways as well. Mihika joins in with details of what was highlighted during the earnings call. Mihika, what stood out there?
Yeah, the talk of the town for the earnings down was their Blinkit or the quick commerce segment. Now, the Blinkit business, which was acquired back in 2022, did turn adjusted EBITDA positive in the month of March for the first time ever. However, for the quarter, the total EBITDA loss was at 37 crores for the quick commerce business. What the company has planned is a very aggressive expansion plan in terms of stores. Now, the total store count at the end of Q4 stood at 526, and the company is going to add 100 more stores in Q1 of FY25 itself, and they're aiming to ramp up the total store count to 1,000 by FY25, which almost doubles the store count in little more than 12 months or so, even though that's the base timeline that the company has given. Now, they do expect the expansion to lead to EBITDA neutrality, means they want to maintain break-even levels, and their focus is on expansion, especially in the underpenetrated areas in the top 8 cities. They highlighted Bengaluru, Mumbai and Hyderabad, as they're planning to bring the gross order value of these cities at par with the Delhi NCR region, which is the company's largest market. And this expansion will lead to an improvement of gross gross order value by 4 times. When it comes to the Hyperpure segment, now they do expect improvement in EBITDA to continue. However, that's not their focus according to the company. Their focus is more on scaling the business, and with scale, there would be a deacceleration in the triple-digit revenue year-on-year growth numbers that the segment has been seeing, and this was also seen in the Q4 results itself. And lastly, for food delivery, they do expect margins to be at 4 to 5% of the gross order value in the next few quarters. And looking ahead, the management has guided over 20% growth in the next few years.
Okay, Mihika, thanks for putting that into perspective. Must say Zomato has made it a habit of recovering from lows. Did the same thing yesterday, has done the same thing today. What is not recovering from its lows is UPL, down about 5%, despite the dollar bond doing okay. So something upset there. Chalet Hotels has reacted to its numbers, down about 3%. Lupin is down today. So Pharma is taking a bit of a backseat after having a rah-rah run yesterday. So even that. And the index itself is lying absolutely flat for some fanfare that we saw at the start of the trading day. Nothing too dramatic, but just completely flat in the session today. On the flip side, it is the likes of the shipyard stocks. Everything related there. GE Shipping, Cochin Shipyard, which is a shipyard stock, of course, and not a shipping stock. Mazagon Dock, which is also, in some sense, you could argue, related to that field, are all doing okay for themselves. So watch out for that bucket. Certainly seems to be having a good day in trade. Wrap it up on this leg of Talking Point. Thanks so much for tuning in.